If you have ever looked at your policy and seen numbers like 100, 300, you are looking at liability limits, most commonly bodily injury liability. And those numbers matter a lot because they determine how much your insurer will pay if you cause a crash and someone else is hurt. Here is the plain English version. The first number is the maximum your policy will pay for injuries to one person. The second number is the maximum it will pay for all injured people in a single accident. So 100, 300 means up to $100,000 per person and up to $300,000 total per accident. 250. 500 means up to $250,000 per person and up to $500,000 total per accident. 500 means up to $500,000 per person and up to $500,000 total per accident. Notice something important. 500 does not mean unlimited. It means the total cap for the accident is still $500,000. So if multiple people are injured, everyone shares that same total limit. Now let us connect this to real life, because these numbers are not abstract. Imagine you cause an accident and one person has serious injuries. The ambulance, emergency room, surgery, physical therapy, and missed work can easily push a claim above $100,000 in many parts of the country. With 100, 300, if that one person has $108,000 in damages, your insurance may pay $100,000, and you could be personally responsible for the remaining $8,000, depending on settlement and legal outcomes. Now imagine there are multiple injured people. Say 3 people have claims, one at $140,000, one at $120,000, and one at $90,000. That is $350,000 total. With 100, 300, the per person cap means the $140,000 claim is limited to $100,000. The $120,000 claim is limited to $100,000, and the $90,000 claim can be paid in full at $90,000. That totals $290,000. But there is also the $300,000 per accident cap, so you are close to the ceiling, and anything above the limits becomes your problem. With 250, 500 in that same scenario, each person can be covered up to $250,000, and the total can be covered up to $500,000, so the full $350,000 could be paid by the policy, meaning far less personal financial exposure. With 500, you have even more room for a severe single injury claim, because one person can be covered up to $500,000, but remember the total is still $500,000. So it is strongest when the main risk is one catastrophic injury rather than many moderate injuries. Now let us talk about what you are actually buying when you increase limits. You are not buying protection for your car. You are buying protection for your balance sheet, your savings, your future earnings, and potentially your home equity. Liability claims can lead to lawsuits, and if the damages exceed your coverage, the gap does not disappear. That gap can become a personal obligation. So how do you decide between 100, 300, 250, 500, and 500, 500? Use a simple framework. Match your liability coverage to what you need to protect. If you have minimal assets and minimal income, you may feel that 100, 300 is sufficient. But if you have significant savings, a high income, a home, or you are on a path to building wealth, higher limits often make sense because you have more to lose. A practical rule many people use is to carry at least enough liability coverage to cover your net worth, and ideally more, because future wages can also be a target in certain legal outcomes. Now let us address the price part. In many cases, jumping from 100, 300 to 250, 500 is not as expensive as people assume. and the protection increase is large. Going from 250-500 to 500-500 can cost more, and the value depends on your risk profile, your driving environment, and how much catastrophic protection you want. Here is how to think about value. If the premium difference is small, the upgrade is usually a strong deal. If a premium difference is large, you compare it to the financial downside you are avoiding, and you consider alternatives. One of the best alternatives to consider is an umbrella policy. An umbrella policy can add 1 million or more of liability coverage on top of your tow and home policies, but it usually requires you to carry higher underlying tow limits first, often 250-500 or similar. So, for many households, the most efficient setup is 250-500 on tow liability. Then add an umbrella for an extra layer of protection. Now, a quick note about 500-500 versus 500-1000. Sometimes you will see 500-500 written differently, and some insurers offer 500-1000, meaning 500,000 per person and 1 million per accident, which provides more protection when multiple people are injured. If you are comparing options, always confirm the per accident limit because that is the shared cap. Before we wrap up, here are common mistakes to avoid. First, choosing limits based only on the monthly price without considering what you are protecting. Second, assuming minimum required limits are adequate. Legal minimums are often far below the cost of a serious injury claim. Third, not coordinating tow limits with an umbrella policy requirement. So the takeaway is this. 100-300 is a basic level of protection and can be exceeded by serious injuries. 250-500 is a major step up and often a strong balance of cost and coverage. 500-500 provides stronger protection for severe single claims, but the per accident cap still matters, and you should compare it with 500-1000 if available, and with adding an umbrella